This is Rod Kusanen, Spooman for Risk for Tuesday, July 5th, 2011. All times on the chart are Central Standard Time. We're featuring our trend strategy for 9.0, and we're going to take a look at some of the trades and some of the individual components of the various strategies that we're running on this workspace. Now we have 7 different strategies set up just slightly differently on this workspace. We have a dual profit target. Our first profit is taken at 6 ticks and our second profit at 11 ticks. In addition to that, we set up our stop loss at 4 ticks, 3 ticks for a break-even stop with a 1 tick offset. Our first trade takes place at 10:06 a.m. and that hits both of our profit targets. We get another trade at 13:04. That basically gets hit by our break-even stop, and we go no further. Then later on, we get another long trade at 13:25. That hits both of the profit targets. We get a nice short trade at 2:30, which unfortunately got stopped out by the break-even stop, although it was a good trade. Stop there was just maybe a little bit too tight, and we didn't get another trade, but we did get stopped out on a long trade at 14:44 before the market rallied back. Now, a couple of interesting things. Let's just take a look at our retracement lines. Our retracement lines were 94% accurate today, so very high accuracy on those. And with the thought in mind of using our retracement lines, your long trade here could have been held up to the first couple of retracement lines, and that's basically where the strategy did take profits. You might have held it a little longer until the retracement line way up here at 13:35 got hit. The second successful trade here also could have been held a bit longer for that higher retracement line here, and then possibly holding it to some other retracements above and beyond that. The same true of the short trade here. Could have been held down to the retracement line either here or here, but we didn't set it up in that fashion. We just set it up for a very simple, straightforward profit target. Now, for those who are not aware of it, our strategy is made up of primarily a z-score as well as a volume indicator. We also use a stochastic on the VIX. So our intent here, the way the strategy is set up, let's take a look at a workspace that will give you a little bit more of an idea as to how we work the system. Now here we have a 500 tick bar ES chart with our volume indicator on it, and the volume indicator is used in a variety of different ways. When you look at the volume indicator, you're going to see several obvious facts. Sometimes the bars are below zero, sometimes the bars are above zero. Here they're below, right in here, and of course here they're above. So that's one aspect of the strategy that we are going to be watchful of. The other factor has to do with the slope of the bars. For example, red bars here show a declining slope. Green bars show an increasing slope. There are some bars that are painted white. These bars are considered to be predictive. So what we'll do with our strategy, and I'm just giving you a very simple explanation, it's a little bit more complicated than what I'm about to describe. But if you ask for a demo, we'll describe this in greater detail for you. Let's look at this move down here. We have a white bar showing up here. When we have a white bar, we set the low of the Spoos based upon the occurrence of the white bar. And we will not allow the strategy to trade a long trade unless we drop to less than or equal to the low that occurred at this time, and the slope of the bars have to be on the increase. So we set the low here at 1330. We didn't drop below that until here, but the slope of the bars was negative instead of positive. We set the low again here because of the white bar. On the next bar, the slope of the bar is positive, and we're able to take the trade. So that's why we had a nice long trade there at 10:06. Some additional factors have to do with the VIX. We set up the strategy to look at two facts pertaining to the VIX. Using a stochastic, we want the stochastic on a long trade to be overbought. We want the z-score of the VIX to be dropping. The two in combination with the other factors that go into the strategy will help to trigger the trade. On our primary trading workspace, we superimpose the data feeds that are being used in the strategy so that all of that data can be seen on one particular chart, although it is not essential for that to take place. The chart can get fairly busy depending upon how wide and how tall a screen you may have. So this looks a little busy to say the least when you're looking at it in a resolution that is as fine as we are when we're producing this video on YouTube. But in a typical screen, it's really not too difficult to watch. So once again, we're going to use a variety of different tick intervals. Some are minute intervals. We use our tick interval for the VIX, and we also use the premium from time to time. So we combine this data using different intervals, slightly different settings, to set up the strategy, or strategies as the case may be, to help trigger the trades. Now from time to time we're asked, well, is the system automated? And of course the answer to that question is yes. The system can be set up so that trades are entered automatically into the trade manager along with the stops. The strategy will place a trade signal on the screen so that if a trader wants to trade this manually, he can of course choose to do so. Generally speaking, however, we would not recommend that you trade manually without a signal. Let the strategy pull the trigger, give you a strategy signal, and then use that for the basis for your own individual manual discretionary trading. Now in the days ahead, we're going to be looking at a couple of other features of this strategy that use divergence, and we'll talk about that in our videos in the next few days. So to review, our strategy is a completely automated system based on a variety of different settings that utilize a combination of z-score, stochastics, volume indicators, in conjunction with different tick or minute intervals, as well as different data feeds. We combine that data together to establish the basis on which our trades take place. If you would like to have greater and more thorough information about our settings, feel free to give us a call, ask for a demo. We'll be happy to show you in greater detail and take time to answer any questions that you might have, and show you in really much greater depth some of the other facts that we use when we're trading in a discretionary manner. There are other data feeds and other information that we also watch, which helps us to have a greater confidence about the timing of our trades. So with that thought in mind, we'll complete this video. Please comment on our videos if you wish, and contact us at RSKsys.com. This is Rod Kusin, Spooman for Risk.